Good day, ladies and gentlemen, and welcome back to another episode on the Crypto Princess channel with Bill Noble. How are you, Bill?
Hi, I'm doing well. Thanks for having me.
Awesome. So today we're going to be talking about the Japanese banking crisis, its bond crisis, its yen crisis, and how that can spill over and affect Bitcoin. So most people do think of Japan as this low rate, nice country in the background. It's very polite, it's stable, it's slow running. But Japan is one of those places where if something cracks, we will all feel the shock waves through things like bonds, currency, and liquidity. So, why does Japan matter now? Well, Japan is the most indebted major economy in the world. In fact, it's only second to tiny little old Lebanon. So, when a country like that has to refinance, it has to roll over its debt, it has to defend its bond market, it can move global yields. The yen has been and is one of the largest carry trade currencies in history. Its carry trade industry is big business, and for decades, the yen has been funding the carry trade industry, as in being the currency of choice. So basically, that is you buy cheap yen, you move it to a higher yield asset elsewhere, and that creates a trade called the carry trade. That's the profit or the little bit extra that you get, the carry trade, the carry. Japan is also one of the biggest holders of US Treasuries. So if Japan's institutions need liquidity fast, it can lead into America's bond market, which then leads into everything priced off US yields. So what happens in Japan doesn't stay in Japan. And this stream, we're going to be talking about obviously the domestic and the international bonds, the yields, the carry trades, and how all of that is or could show up in Bitcoin. Because crypto doesn't live in its own separate world. Crypto is this global liquidity asset, and liquidity is heavily influenced by the bond market, interest rates, etc. So if you watch Bitcoin, you cannot ignore bonds because you're missing a lot of data. So let's start at the very beginning. What are bonds? Bonds literally are an IOU. It's literally a government saying, lend me your money today and I'll give you back your original amount plus interest on top. So if you buy government bonds, you're the lender, the government is the borrower, and yield is simply what you earn or the interest on top. Here's a key rule because we're going to need this later on in the stream. When bond prices go up, yields go down because a lot of people want the bonds. When bond prices go down, yields go up because not so many people want the bonds. Still, the government has to sell bonds, and we'll talk about why. And we'll talk about why in a second. If we apply this to Japan, Japan has lived at near zero yields for decades. For a long time, you can lend money to the Japanese government and buy Japanese bonds, and in return, you'll earn a yield that's very, very low, almost close to zero. So investors are basically lending Japan or the Japanese government money for almost zero interest. They're doing it for other reasons, such as stability, safety, regulation, central bank support, and me and Noble were talking a bit earlier, is all about patriotism. So when Japan's long-term yields now are pushing past 4%, that's a big deal. Japan is now having to offer much higher yields, so people will borrow its money than it has done for decades. And this matters because higher yields mean higher borrowing costs, and the more that the government has to pay to get people or institutions to lend its money, and a government with a huge amount of debt already, it feels like higher borrowing costs are more risky. So why does Japan even have to borrow so much? Why is it selling domestic bonds before we go on to international bonds? So Japan is issuing its own bonds and it's using that money to finance infrastructure, stimulus, economic stimulus, housing support, military because of geopolitical reasons. It's actually putting more money into the military now. Japan can wait, but our governments in general often stimulate during weakness, not strength. Japan's economy can't organically fund itself because of the demographics. Very important piece of information. Japan has one of the largest, oldest, or aging populations in the world. It has a shrinking workforce, fewer workers, less tax revenue, less consumption, more elderly people, more healthcare costs, more pensions to pay. Japan isn't growing or isn't drowning because of COVID alone, although it had problems even before COVID. COVID just accelerated the problems it already had. Bearing in mind, Japan bought a lot, or it stimulated a lot in COVID. Just like other economies. Now, Japan's debt, or the debt, is growing faster than the output, as Japan's workforce numbers are low. So it's harder to grow your way out of debt. I do apologize. It's harder to grow your way out of debt, especially if your workforce is getting older. So let's talk about banks, and this is where it gets uncomfortable. Japan's banks are struggling as well. Actually, before we talk about Japan's banking crisis, Bill, what is your take on Japan's bonds, domestic bonds, as they are at the moment?
The Bank of Japan has made a decision to just let the bond market go. Right. In other words, their government debt situation is so dire. Their debt compared to their overall output is so bad. It's way worse than ours. You know, for every dollar that they create, they owe two. So this has been a problem and a known issue for a long time, and now it's just being traded, right? It doesn't matter until it does, and now it does. So they've engaged in all kinds of games. They call it yield curve control. They've tried to control interest rates. And then the Bank of Japan just woke up one day and said, no, you know what? We're just going to let it go. They didn't say that, but, you know, yields have just gone up and up and up as people abandon, short sellers attack. You know, this has implications that I'm sure we'll talk about, but the Bank of Japan is just letting it go. Mm-hmm. Right. And then the next thing they're going to have to let go, most likely, is the currency. So,
yeah. Okay. No, I completely agree with you, because when it comes to the banks, what you're seeing with the banks is that they're struggling to lend because there's fewer people to borrow. Because they have a elderly population, bless them, who are settled, and they've done their time. They've done their time in the workforce, all the rest of it, and they deserve that time to themselves. So they have fewer people to lend to, fewer borrowers, and a lot of the banks are on the old yield bonds, and those are losing value on paper. The government's still paying them, but they're losing value on paper. So when the Japan's banks look at the new bonds, they're a lot more attractive. The government's, like I said, the government's paying them. It's more of a lost opportunity. Money's tied up in these horrible old bonds. And the older bonds are obviously paying less. If the banks were to sell these older bonds, they will realize the losses. If they hold, they're going to get weak returns. It's almost like Japan's problem, especially with its domestic bond market, has just been kicked down the road. And now they're having to face it. And they've got this aging population which doesn't need to buy banking products, and why should it? They've done their time and they've contributed to the country and to the economy. And then you've got, on top of the domestic bonds and what's going on with the domestic bonds, you've got the US bonds. So we'll just touch upon that. Did you want to say anything about the banks just before I touch upon the US bonds that Japan has as well? Oh, Bill, I think you've frozen. Oh, bless. 1 second. I think Bill has frozen. So just very quickly, let's go on to the US bonds. Oh, okay. Actually, 1 second. Hello, Bill and Princess. Do you think? Yeah, the rates.
Okay, so you're.
Oh, there you go.
So,
Okay,
so we're
sorry,
back.
you completely forgot frozen. I completely did not hear you. If you
Okay.
said anything, yeah.
No. I let you carry on.
Okay, so let's talk about the US bonds, because we've got this crisis at home. We've got an older population. We don't have many people in the workforce, or not as much as Japan needs. Beautiful country, all the rest of it. They've done their time. They shouldn't be doing more time. Then we've got internationally, the government is issuing issuing bonds. The new bonds are looking more attractive. We have that internally, but externally, the old ones don't look very attractive because the rates are much lower. Externally, they have the US bonds. Now, Japan owns a huge amount of US bonds, over $1 trillion. Now, as far as I'm aware, Japan is the largest holder of US bonds anywhere in the world. If Japan needs cash, it can sell some of these bonds. And remember that rule that we had: if a lot of bonds get sold, the price of the bonds can drop. So for Japan to sell these bonds, they need to sell them cheaper. So when the prices drop, the yields go up. Higher US yields means that the US has to pay more interest to borrow money. So borrowing can get more expensive for the US as well. Speed matters. Selling bonds slowly, that's not an issue. Markets can handle that. The impact is small and it's over time. However, if Japan had to sell the bonds fast, that would be a bigger shock. It will be more volatility. Yields can jump. Japan's bought so many bonds, and the reason why it bought US dollar bonds, was because it's the safest, the easiest place to park dollars. Japan earns and holds a lot of US dollars from trading, from investing. So they put these dollars into US Treasuries because it's safe, it's liquid, it's easy for cash, and it earns yield, interest, etc. What's the risk that Japan will sell its US bonds fast to raise funds? And how is that going to impact crypto?
Okay, so here's the chain. Japanese insurance companies and banks are huge. If you ever have time, you should drive by some of the headquarters in London and just stand there and look at these huge buildings. They're enormous. They have possibly up to $60 billion in losses on Japanese government securities, because that's their primary asset that they hold for both financial and patriotic reasons. So as these losses mount, okay, and you said it exactly right, if the Japanese government bond market deteriorates rapidly, slow deterioration, okay, bad. But if there's rapid deterioration, that could trigger panic insurance companies selling of Japanese bonds. They've got this $60 billion hole in their balance sheet. So where are they going to get $60 billion from? Well, they're going to have to sell U.S. government securities, They could have to sell US stocks. Okay. And again, this idea of a disorderly move in these markets, whether it's bonds or currencies, can just trigger computer models that operate the yen carry trade. You don't have to understand the models or the carry trade to know that when you have a disorderly move in a major financial market, all these models beep and everybody sells. What do they sell? Everything, anything. That's what the models tell them to do. Like, oh, fear, disorderly, math breaks, sell. Doesn't matter what the portfolio manager wants to do. So if the Japanese government bond problem accelerates or spills over into the currency, which I'm sure we'll get into, panic selling of our bonds or our stocks or risk assets in general can happen. And it can happen quickly. How quickly? I don't know. How quickly did silver go from 80 to 112? Okay. And we're talking about much bigger markets here. So if these things accelerate, they become a problem. Now, for Bitcoin, two things. One, Bitcoin may get caught in any initial liquidation, or we could be looking at the reason why Bitcoin and alts just can't rally. So it may not be forced selling, but the buyers are not out there because this thing with the yen extinguishes speculative juices or speculative fire. Now, what happens when people realize that this government debt problem in Japan and the United States is that serious? What's the Japanese public going to do? What's everybody going to do? They're going to go looking for alternative currencies. Tokenized metals, maybe. Bitcoin, most certainly. The question is from what level? I don't know. Some people think it drops into the 70s. To me, I just don't care because I think Bitcoin's going to wind up at 170 when this becomes, as obvious as, say, silver now is, right? Nobody thought silver was going to do what it's doing, and we've entered an era where all of these old manipulations and all of these old problems, like, there's not enough silver for everybody who's got a paper ticket that says they have it. Japanese government bond market is the same type of problem, right? It's been there for a long time. Everybody knows about it, but now we're just in an era where these things are going to get expressed in markets, like in a very serious way. So when that happens, there can be an initial liquidation and a complete freak out. There's an election in Japan on February 8th where every politician is saying all the wrong things to support the bond market and the currency. And when people in Japan get perhaps as disillusioned as some people got in America, Bitcoin becomes an inevitable solution. That's kind of the executive summary.
Yeah. Okay. So let's talk about the yen carry trade. We'll touch upon it. So with the bond market, they can sell other things. Would America step in at all? Would America step in and buy back the bonds or anything similar to that? What normally happens in situations like this?
Okay, well, you actually said it perfectly, right? Japan can't save itself. There's no way, right? And the Fed has already stepped in knowing that the next thing the Japanese are going to have to let go is the currency. Like, they will have to stop the bond market from destroying itself because otherwise they can't borrow and they can't function. So in order to do that, they're going to have to print so much yen that the yen's going to collapse. Meanwhile, the Fed, it's all over Twitter, has already set up a facility to do something that's very old. It's just called an FX intervention, which is, the Fed is going to buy yen and sell dollars to try to keep, the yen from collapsing and the dollar from skyrocketing versus the yen. We can go over the chart at any point. We probably should just do it now. You know, if someone wants to know why the Fed is saying, you know what, we're not going to let this thing get destroyed. Here's why. So this is dollar yen quarterly. So each bar is 3 months. Back in 1985, the G7 got together and said the dollar is too strong and just gave the foreign exchange market license to drop the dollar. So the dollar fell, the yen rose. Dollar down, yen up. George Soros made all his money here. And this is a 1-year period where the dollar went straight down and the yen went straight up. So, high school physics, speed, magnitude, and direction. What goes down one way can go back up the same way. So if dollar yen, in other words, $1 is equal to 160 yen, if this breaks 160, which is the high from 1990, there's this air pocket here and could go straight to 250. Yeah. So, I mean, you know, if $1 buys 160 yen, then you go on vacation and you go and you come home and then $1 is 250, you know, buys 252 yen. That's a massive devaluation. And of course, this was disorderly on the, you know, when the dollar fell, but that's because governments wanted it that way. Governments don't want this, right? They don't want some kind of disorderly unwind of a massive currency like the yen, right? So that's why the Fed is set up, and the Fed is telling the market they've actually stopped the insanity for now. They've stopped this crisis by the Fed saying, you know, we're not going to allow this. The only way this works is if the Fed defends the yen, in effect, and then prints money to buy the U.S. bonds that the Japanese will have to sell. And of course, don't forget, as we've mentioned on the show, Uncle Sugar has to roll over 11 trillion in debt this year on top of that. Right?
Let's carry on.
No, I mean, it's just, how does this not result in massive printing, right? A new Fed guy is coming in. Trump wants rates at 1%. Scott Bessent wants to create money via stable coins. And a little known fact, the Treasury Secretary, Scott Bessent, a former hedge fund guy, is also the head of the IRS, the tax agency in the United States. So the Treasury is just going to say, you know what, we're going to send everybody a $5,000 tax refund before the election in November. So they're going to print.
So let's bring in something that's quite unique to Japan, the aging population. No matter what they do, they're going to kind of, unless they change what happens domestically, I don't know, maybe let in people from other countries or something similar to buff up their workforce, they're always going to have this issue because the aging population has its house. It's not interested in banking products, but what they do need is they need care and they need their pensions, etc.
Yeah, I don't understand why governments are not incentivizing people to have babies. You know, it should be have a baby, get a $50,000 check, stay married with the baby, get another $50,000 check, and never pay, and then have more than
Russia's
2 kids.
Doing that, by the way. Russia does that.
And have more than 2 kids, and you never pay taxes again. Or more than 3 kids, you never pay taxes again, ever. So we'll give you the money and you don't pay taxes. I don't know why they don't do these things. I don't know.
We've got that sort of issue in Scotland. So we go up to, I go holidaying in Scotland. There's hardly anyone there. And they're always complaining that the younger people are going to England and they're getting jobs in England and all the rest of it. And they're just left with a lot of elderly people or a lot of people out of work in Scotland. That's why one of the reasons I think Scotland just wants to get back into the EU, because they want that immigration there. But yeah, this is going to be an issue because they don't have, and I think a lot of the younger people, they are actually doing the yen carry trade, aren't they? On the side, they're making it worse.
Babies will be a national security priority. Elon Musk has talked about it. Especially after you watch what happens in Japan. I mean, supposedly 3 generations from now, South Korea will be gone. South Korea will be empty in 3 generations. So at some point, baby making is going to be a huge priority. That's outside the scope of the show, but I mean, they need to import people or make people before it's, I don't know, before it's catastrophic. It's a shame because their culture is incredible, right?
Oh gosh, it's so nice. I love Japan. I want to go one day. So let's talk about the yen carry trade. So for years, Japan has had, obviously, it's very low interest rate. So borrowing in Japan or borrowing the Japanese yen was cheap. So what investors did was, step one, they borrowed yen cheaply. I'll just explain the carry trade. They borrow the yen cheaply. Step two, they swap the yen for dollars. Step three, they use the dollars to buy things that can earn more money, like bonds with higher interest or stock or other investors. And step four, they would profit the difference between the cheap yen borrowing and the higher returns elsewhere. And that's why it's called carry trade, because the carry is the profit from the interest rate gap. Now, carry trades can sit for months or they can sit for years. They're not get rich quick, if that makes sense, until the yen makes a sharp move. Then everyone tries to exit at the same time. And this is something that's impacted crypto. Retail can put on a carry trade, and they do, but the bulk of it is mainly done by institutions. Now, the classic yen carry trade is professional. It's a large scale trade done by hedge funds, macro fund banks, trading desk, asset managements, large companies, all the rest of it. Retail do participate, but the yen carry trade is primarily an industrial trade. So when the yen strengthens, the unwind can become forced, and it can become a crowded exit, if that makes sense. Now, one example of the carry trade unwind was in August 2025, and I actually remember this. Let me just share my screen. Share screen. If it unshares for some reason, just do let me know, because I'm on a different tab, so I can't see it. I don't know if you can see my cursor. So 28, 29. Okay, so around here, the 30th, 29th of July 2024, the yen started to strengthen. Now, a stronger yen makes a carry trade harder, because people who are borrowing yen now need more dollars to buy back the yen and repay their loans. So tensions started to build. We have a red candle here. We're on the daily chart, and it shows obviously in the Bitcoin chart. Now, over the following few days, Bitcoin fell as the yen started to strengthen. Investors were reducing risk by selling risk on assets, including Bitcoin. So they started to sell off here. And then comes, and I remember this candle hang on. That is the right one. I remember this candle. On the 25th of August, the unwind really hit. Bitcoin was around 100 and no, it wasn't. Yeah. So here, the Bitcoin, I mean, it says it here. The high was the 58,000. The low was 49. But I think we're actually looking back, because with crypto, it kind of comes in a group. And with crypto, oh my God, it moves so fast. So from here, we're looking at round about 65,000, and it went down in 1, 2, 3, 4 days to 49,000. US dollars. That was a dump of about 23% in a short period of time. Took 3 or 4 days for Bitcoin to recover back up to 62,000. Now, in situations like this, investors often sell what's easiest, what's faster, and what can sell to raise cash. And crypto is one of the most liquid, risky assets that they will first go to. And it gets sold to cover their positions, especially in yen. So here's the truth. For decades, the Japanese yen has been the most important carry trade currency in the world. What happens when that breaks? If the yen suddenly gets stronger, investors are going to panic because they've already borrowed yen. They will have to pay back their loans. They would need yen. If the yen continues to strengthen and becomes more expensive to buy that yen back, to pay back that loan, investors will unwind the trade fast. Now, just a couple of quick questions. How likely is it that if we were to have another unwinding, Bitcoin will still be affected, if that makes sense? Bitcoin will still be one of the first assets that they would run to. Yeah. 1 second. Let me just unshare this now.
Okay. So good news, bad news. The good news is we don't have to worry about an exact repeat of 2024 because the yen is not going to go up. The yen is not going to strengthen. The yen could actually collapse and go the other way. Now, the carry trade can be hurt because the interest rates that they have to pay to borrow the yen could be much, much higher. Okay. Overall, the carry trade example is an example of how intertwined Japanese interest rates and currencies are to risky assets all over the world. So if you have a disorderly move in either direction, like that thing you showed in 2024, that was the threat of a disorderly move. It wasn't disorderly. It was relatively normal for foreign exchange. But, crypto went down. ETH lost like 40% of its value in a weekend. I had grown men calling me up going, oh my God, what is happening? Seriously. So that was real panic. Now, that type of panic can come again, not because the yen is going up, but because something has gone horribly wrong with their bond market or their currency market or both. Right. So the yen carry trade, I think the big seller is not the hedge fund speculators this time. Last time it was. The big seller are these insurance companies that have to cover losses like I was talking about earlier. So you're right to show that example that that's what can happen when you have these type of macro disturbances out of nowhere. The first move in crypto can be down. It can be. If everything gets liquidated, if the Magnificent Seven gets liquidated in equities, Bitcoin will get hit. Okay, now, how fast does Bitcoin come back? Because this is a currency issue, very fast. Very fast. Especially since the Japanese public is going to figure this out and go, wait a minute. You got to be kidding me. The land of robots and anime and technology, they're not going to figure out the electronic currency? Oh, yeah, they are. Oh, yeah, they are.
Mm-hmm.
Imagine the inflation if the yen moved like 30, 40% down, like what their inflation rate, what would happen over there? It would be a disaster. People and institutions would have to hedge with Bitcoin rapidly. So, I mean, that's hopefully that makes sense, right? I mean, either the Japanese currency goes up, that disrupts the carry trade. If interest rates go up, that can disrupt the carry trade. And even if it doesn't, these things have huge implications because of the institutions that hold these assets and these currencies. If their computer models tell them to sell, you're going to see unbelievable price action.
So one of the first things that they will sell is probably Bitcoin, come straight into Bitcoin rather than something else. Is it more likely that they'll sell Bitcoin before they start selling their domestic and international bonds because it's more liquid?
I think the first thing that they're going to sell is U.S. Treasuries. Right. That's the first thing. This is why the Fed has this intervention queued up. They don't want them selling Treasuries. I think the next thing that would get sold if there was a Treasury market disturbance is S&P. S&P is the most liquid market in the world. So now if S&P got sold or NASDAQ got sold, that's where Bitcoin would get hurt. Bitcoin is the biggest crypto asset, but I mean, Bitcoin is only $2 trillion. It isn't even a Magnificent Seven stock, really.
No.
But Bitcoin is very sensitive, and you're watching this altcoin bleed, and I think this is why, because people who take risk are watching this thing in Japan and going, "Yeah, I'm sorry, not going to take any risk right now. Going on a winter vacation. See you later. See you when this is resolved. See you when the Fed comes in." Right? That's really what Bitcoin's waiting for. That's when Bitcoin reacts.
But that's what Japan's waiting for as well, isn't it? They're just waiting for the US to come and save them. The US can't save everyone.
Yeah, well, that's what they say. But the reality is, I got to be honest with you, as an American, if the US dollar is the world's reserve currency, we should take that seriously. Like I am not in favor of all these sanctions that they do. It should not be weaponized. We should take it seriously. And guess what? We're going to have to take it seriously because you cannot have Japan break. You cannot have an insolvent government. You want to talk about too big to fail? This is laughable. In 2008, they considered insurance companies and broker dealers like banks, speculative banks, too big to fail. They let one bank fail, Lehman Brothers, and S&P went down 40%. So how are they going to let a country fail, a currency fail? That's not happening. It's not happening.
Especially the Japan's currency, because it's got so much US bonds, whereas obviously with the lira in Iran, they didn't care about that because it kind of fitted their thing. It just made the geopolitical tensions worse, or within the country worse. But with Japan is what did you say to me before? You said something along the lines of it's in the top 3: US, Europe, and Japan. That's how big it is.
Right. It's considered. I mean, if you read the history of the Japanese economy, of Nikkei, their stock index, I mean, it's a monster economy. I mean, I know it's got all these problems, but it's still a gigantic economy, right? Especially for its size. It's manufacturing based. I mean, think about it, just like basic, think about Toyota, right? Honda, all of these brands, these banks like Sumitomo, they are huge. This is not some small little random country. This is a big deal. Now, is it a big deal in people's minds today? No. But if you're wondering why your bags don't move, right, it's because, people, the speculative fever is not there because of the fear of Japan. You could also say that some of this fear is fueling what's going on in metals, although that's a small part of it, if you ask me. If you look at Twitter, it's different, but I don't think anybody has put together that gold is at $5,000 because everybody's worried about what could happen in Japan and how that could affect the global markets.
Because that's what they run on. They run on the precious metals, gold and silver. They run on fear. They run on uncertainty. They run on geopolitical issues. Now, let's talk about, just very quickly, we'll touch upon it now, silver, because we can't get it. Silver is just literally everywhere at the moment. Within the last 24 hours, absolutely effortlessly. It put in the entire market cap of Ethereum. That's how far it's gone up. Literally the entire market cap of Ethereum, and it did it absolutely effortlessly, which is absolutely amazing. And this is why they're up. They're up because they can see, a lot of the people in the know can see what's happening in Japan. They can see what's happening in other countries as well, because a lot of other countries are in issues. They have issues. Just very quickly, how come Japan was at 0%? Because when I was doing the research for this, Japan was pretty much at 0% for decades.
Right. Okay. It's a good question. So Japan had a real estate bubble and a stock market bubble in the 90s. Like when I was in college, we were all told that we have to learn how to speak Japanese because they're going to take over the whole world. At one point, things were so hot in Japan that you could buy a breakfast cereal that had gold flakes in it. That's how hot it was. And everything in real estate and stocks went up so high. And then guess what? That bubble burst. That bubble was so big that their economy went into a deflationary spiral. People didn't want to spend their money. They didn't want to put it in the banks. They put their money under their mattresses at home.
That's actually worse than inflation, isn't it?
It is. It is. They thought the country was going to disappear because of deflation. So what did the government do? It absolutely issued debt. It printed. It went crazy. That's why they have all this amazing infrastructure over there. That's why it's so beautiful. They just built everything. And they issued and they issued and they issued, and it was at 0%. And their economy still wouldn't move. They tried to stimulate the economy and they couldn't stimulate it. They couldn't. This is for years, decades. Rates were at zero, and nobody ever thought that they would come off zero until one day you had, inflation in the US or inflation globally. And then you started to have inflation in Japan. But the central bank, this brings the problem full circle. The central bank was too afraid to raise interest rates because they didn't want to be responsible for a global market meltdown by blowing up the yen carry trade. Right? That's why the central bank has been slow to raise interest rates. They've just let the longer term bonds do that. But the answer to your question is Japan has had a deflationary problem, and they still will. If the population disappears, price pressure disappears, which is part of the reason why, ironically, some banks like Sumitomo have come in and say, yeah, we'll buy these bonds at 4% interest. The government's backing them. But they have this terrible population problem, was deflationary. They tried to spend their way out of it, and it backfired. We're worried about the same thing happening over here, right? I mean, that amounts to the fall of Rome, which, like I said, there's no way the Fed and Bessent can allow this. They can't allow this to happen.
And my last question will be, because I know you've worked for 25 years, the banking sector. How does it feel for these big managers and all the rest of it, these CEOs, when they see that they've bought bonds at the old rate, the low rate, and now they see the shiny new bonds? I mean, for us, it will just be something like a bad taste in the mouth. How do they feel? And are they going to do anything about that? Because technically they can just sit down, have that little bad taste in their mouth, and they're still getting paid.
Right. Well, I mean, the issue is these bonds that yielded 0%, they were negative for a while. That means the Japanese, like they charged you to lend them money. Said, here's our money. They charged you for lending them money. That's what negative rates means. The losses on these balance sheets are so catastrophic. These guys must sit there and look at their P&L and go, I don't know what we're going to do. I don't know what we're going to do.
Mm-hmm.
I don't think the Japanese public understands what happens to their institutions if this got out of control. Namely, volatility, like it got disorderly. Like things can move, but if they start to move in a disorderly way, things can break. And these guys are scared out of their mind, and they're probably on the phone with the Bank of Japan and the Fed. Like the Japanese are on the phone with the Bank of Japan, and the Bank of Japan is probably on the phone with the Fed, Besant, and even Trump, going, this cannot happen. Like we're going to go under if this gets out of control. That's scary.
Mm-hmm.
If you're a CEO sitting there, I mean, you could be responsible, like nobody wants to be responsible for like a catastrophic event. Nobody. And I would imagine these guys are afraid. And I think silver, the way that's getting out of hand.
Yes. Yeah.
You know what I'm saying? Like silver is scaring everybody. It's making me upset because it's taking all the attention away from crypto.
Mm-hmm.
And I'm sure all these guys who are watching, because volatility like silver, volatility is contagious. It's like the common cold in the kindergarten class. One kid sneezes and then everybody is sneezing. In this case, you have incredible volatility in commodities. Guess what? You can have incredible volatility in foreign exchange. You have incredible volatility in bonds, right? You can have incredible volatility in stocks. And then crypto, of course, as we all know, crypto does not need an excuse to move 20%.
No.
Up or down.
Mm-hmm.
So I think a lot of people think, crypto is done until further notice. I think it's more likely that crypto is going to get caught in whatever the initial liquidation is. And then you could have a rampaging turn in Bitcoin. And you could add the privacy coins to that as well. Because, no matter how bad the market trades, the privacy coins always come back. And that's telling you that components of crypto that have a useful purpose can come rampaging back under the right circumstances. Now, do we have to live through crypto winter first? I hope not, but we all know Army Piper got short at I can't stop thinking about this guy. The guy got short at 126 and went on a really long vacation. And he's like, I'll see you in October. And I'm like, oh my God. The thought of that guy being right.
I love Army Piper.
Good for him. I mean, seriously, good for him. Great trade. He's a trader. Awesome. But it gives me nightmares thinking about having to sit here and worry about all these geopolitical style events and metals for 9 months. I'm like, oh my God, what's going to happen? Is Army Piper going to cover that short at 50K? I think about this. He probably is not thinking about me, but I'm thinking about, oh my God, if this guy winds up being right, I don't know what I'm going to do.
The funny thing is, I text him or DM'd him just before he announced that, if that makes sense. And I said to him, I think we're in a bear market. And he's like, I think you're right. So, yeah. Okay. So we've got, money is moving all around the place. You got to follow the money. The money is moving and it's going into the metals. And we know why it goes into the metals. We know why it goes into gold. We know why it goes into silver. So people are seeing what we're seeing. They saw it before us because I wasn't too aware that gold and obviously I don't think most people were actually. Gold and silver will take off as it did. There's only one thing that could possibly save the Japanese yen and the bonds market, the election and who's going to come in. But I think they're all being a little bit silly and they're promising a little bit too much. And I suppose this is what all politicians do. They lie, don't they?
Oh my God. Oh, this is, you know what? One macro guy said this. His name's Just Dario. He's like, the Japanese people deserve better. They called an election on February 8th. And all these candidates are promising tax cuts. They're promising relief from inflation. Now, I understand that's going to resonate with voters who are suffering because, apparently the Japanese grocery store is a nightmare, right? But I mean, you could have total hysteria. Why do you think the Fed has this intervention facility queued up? This could be I mean, that could be like a catalyst, right? It doesn't matter until it does. You know, you have some candidate come in and go, hey, yeah, we're going to spend more money. We're going to borrow and we're going to do helicopter money and just hand it out. Oh my God. Please stop it.
And they can't do that. They can't do that now.
Well, yeah, they can't, but they might.
They try.
They've been getting away with it for a long time.
Yeah.
Like their QE programs were as big as our QE programs, and they're 1/3 our size. So, you know, if they try to cowboy up and do this again, you know, Mr. Market might put a stop to that. But again, the good news is after the initial liquidation, right? After the panic, if it comes, that's got to bring Bitcoin back. That's got to bring the alternative currency back. It's not a dollar devaluation. It's not a foreign exchange move until Bitcoin participates. It's not just silver.
So this is it. So back in 2013, the reason why we had the first peak or Bitcoin's first bull run was because of the Cyprus banking crisis, and people back then found Bitcoin. So if something does happen to Japan, like you said, it's going to be devastating. And may God protect, you know, all the little families that are in Japan. Don't want anything to happen to anyone.
No.
But if it does happen, people will find Bitcoin.
They will find it very quickly. They will find it very quickly. You know what I'm saying? Like, hey, the Bank of Japan, I still think the Bank of Japan is going to find it. They're the ones who are going to find it. Like, who's going to buy a JGB? Who's going to buy the 10-year note in Japan? Nobody. Well, how are you going to get them to buy a JGB? Well, give them pay the interest in Bitcoin, pay some interest in Bitcoin. They're going to buy Metaplanet. I mean, that's my insane prediction. Maybe I'm out of my mind. I don't believe this stuff is going to disrupt the 4-year cycle math. You cannot have this stuff happen. I mean, you know, maybe it's a bear market and Bitcoin's going to 50 because S&P is going down. I get it. I get that. But this is a lot bigger than anything we've seen in the history of Bitcoin. These type of catalysts, these type of macro issues. I mean, think about it. You're a crypto channel and I'm a crypto channel, and we're doing a macro only stream once a week consistently. Couldn't do that in 2018. I can tell you that right now.
Oh, we've got so much to talk about as well. We've got so much.
Endless.
It's like one thing finishes and it's like, I've got 3 other things on the channel. Okay, next week we're going to be talking about this, and the week after that, because there's so much happening right now. So much happening. And all the bullish news is all just, you know, like, say, for example, at the beginning of the year, 2025, we had Trump going to come into office, and he was going to come in, and oh my God, like you know that graph it has, the Wall Street cheat sheet. And right at the top, it kind of felt like, well, Trump's coming in, and then we're going to have the strategic reserve. We're going to have this. We're going to have this, and it's going to go through this. And honestly, I don't think there has been a period of time in Bitcoin's history where it's been so bullish. And then at the end of it, nothing happened. It literally just went down. So yeah, maybe the 4-year cycle is done. I mean, October.
I mean, like I said, and even if you don't believe that, the guys that do believe that are making money, aka Army Viper, right?
Oh, bless him.
The guys that do believe it are making money.
Yeah.
So everybody can go believe what they want to believe. You know, those guys are not going to change their behavior. They're not going to change their thesis until something happens and they're wrong, or they get stopped out or whatever. That's not happening anytime soon because there's no speculative oomph behind crypto. That's why you have the altcoin bleed. That's why there's no bid. If Bitcoin went to 97, everyone thought it was breaking out and just went right back to 87.
Yeah. Okay, awesome. So we've come to the end of the hour. Bill, thank you so much for joining us. We'll be back next Tuesday. We'll have another live stream on macro. On Thursday this week, we're actually covering the RWA narrative, and we'll be covering a lot of other things that are happening in the RWA narrative, a lot of projects, and where all the money is for the RWA narrative, because we've got BlackRock and all of these people coming in, and all the rest of it. But yeah, no, that's us done for this week. Thank you so much. Thank you, Bill, for being here with us as well.
Of course, it's my pleasure. Make sure you follow Crypto Princess. She was on the silver trade a week before everybody on TikTok was last week. So check out the channel.
Sorry, Bill, all of Bill's links should be down below as well. So Bill does have his own YouTube channel, but he has loads of other media as well. Okay, that's brilliant. Thank you so much.